Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets cool off from the highest point of the day to trade with losses. The Nifty falls below the 12,150 mark. Most sectoral indices are lower while the volatility index rises. The Supreme Court threatens to initiate contempt proceedings against telecom companies for failing to adhere to its verdict on the AGR issue. Bharti Airtel trades with gains while Vodafone Idea and Infratel trade with heavy losses. Page Industries recovers from the day's low and continues to trade with losses. The stock saw its biggest intraday fall in almost 8 months after it reported a 2.8% volume degrowth in the third quarter. And banking stocks are the principal laggards in today's session. Both Nifty Bank and the Nifty PSU banking indices are the top sectoral loser. Good afternoon, Neeraj. The opening gains I think we've given up, and now I think Nifty just struggling around the mark of 12,150.
Yeah, and I think it will depend on whether the markets believes that this is a one-off event done, it's digested, and we know that banks will have this pain, but it is the damage is in the price, or whether there could be some more damage. So from an Indian perspective, that's the case. To keep in mind is the weekend. The rate at which the coronavirus cases are getting identified might just make people a bit nervous about carrying on some heavy long positions over the weekend. I'm not saying there are, but even if there are, there might not be some heavy long positions being taken over the weekend because you do not know what will happen over the course of the weekend as well. So that may play in on the minds of the markets, and you've got to keep that at the back of your mind. And therefore, 1% lower for the Nifty Bank. I just want to quickly surmise what the Europe is doing and what the Dow futures or the S&P futures are indicating as well, because that will be a key. So Europe too, muted, well, mixed bag with marginally muted, and the Dow futures again should come up on your screen. Yesterday, a bit of a drop. In today's session, nothing too dramatic. This could change, of course, as we approach trade, but for now it's a flattish move, so not many major cues coming in from the world markets. Lastly, the heat map, and not lastly really, because that's the most important part, but the quantum of red has certainly gone up, and look at the kind of losses that have come in. I think Oil India too would be reacting, but GAIL down about 5%, and you obviously know the reason why. Bharti Infra down about 5% as well. So those are news based, but look at the others. HDFC Bank has corrected 1.5% today. IndusInd Bank is down about 2.5%, but there is reason that they have exposure to telcos in a big way, and therefore the corrective move. Their SBI exposure to telcos in a small way, 1.6%. Asha Motors corrects about 3% as well, and HUL has pulled back a little bit. So that's the other one that you got to monitor. What is doing well? Yes Bank, another 5% higher today, but Bharti Airtel is clearly the showstopper, and Reliance Industries, well, I reckon, Devina, that the market in its wisdom believes that now there is a stamp that has been laid on the duopoly structure as far as telcos go in India.
Yeah, because Vodafone Idea has made it pretty clear as the difficulty of them to move on as a going concern if they have to.
So the market certainly believing that.
Dole out that kind of money. But yes, today's session is marred by some amount of weakness. We are at the end of the week as well. So by the end of today, you'll get a weekly performance for the index on the Nifty mid cap and the small cap. And you've got about 1/3% cut coming in on the Nifty mid cap 100. A few movers though, you've got the likes of Indiabulls Ventures, which is up about 4.5%. Castrol India is up about 2.5%. Glenmark Pharma 2% higher, and so is this Ipca Labs. Remember, in the morning we were just having a conversation with Gautam Dugar, and he spoke about the earnings performance within the pharma space, but they're still not too optimistic from the next year standpoint. Hexaware is up about 2% and SRF2 up about 1.5%. What's doing not so well is Godrej Industries, Godrej Aggregate, both are down 4.5% apiece. Ajanta Pharma gives back a bit, and then you've got RBL Bank, Oil India, IDFC First, all of them looking weak. From the small cap space, which too is under some amount of pressure, the index itself is just flat, but look at Deepak Nitrite. That stock's up 7.8% in intraday trade, and it's just going from strength to strength post its results. Ircon International, two post numbers, has been seeing gains, and today is yet another day. I think day before yesterday is when the numbers came out, and post that the stock has been on a firm footing. Chennai Petro, Aegis Logistics, Lux Industries is up 3.5%, contrary to what Page Industries has been doing, post its very disappointing results. And in fact, we should get the stock up, but first I'll finish getting a check on the rest of the losers. SpiceJet, Radico Khaitan, Equitas, Dish TV, Indiabulls Real Estate are all down about 2.5%. And just a quick look at Page Industries and the disappointing quarter that it had, a reflection of that on the stock price performance. The stock's down about 5% so 22,399 anyway is a little bit stretched, but let's see what the rest of the day takes to. But let's also see what the futures and options setup looks like. Navneet is joining us for that. Navneet, good afternoon.
Good afternoon, Davina. Thanks for that. Well, interestingly, we're off today's high and even off today's low as well. So 12,150 is something I think where the index is right now consolidating. Remember, yesterday's close was just about flat for Nifty futures to spot, and right now Nifty futures trade with a premium of 16 points, 3% higher when it comes to open interest build-up. And remember, in the last few days, we've not seen any major build-up coming up for Nifty futures. It's the Bank Nifty which is in action and has been witnessing some adding of position, and as we see right now also open interest is up about 13%. Bank Nifty for the second day in running is underperforming, down about 1%. Volatility has moved higher finally, I guess, after 3 or 4 sessions. So India VIX is still at comfortable levels, but it's still moved higher by almost 2%. What levels you should watch out then? I think the 12,200 call has witnessed fresh writing in trade. Morning during the FNO show, we had highlighted index had reclaimed the mark of 12,200, but we'd not seen any unwinding from the call riders of that strike, and that's exactly how it played out. 16 lakh shares have been added right now, and even if you look at the 12,200 put, there has been intraday unwinding because in the morning session, I guess 12 to 13 lakh shares were added here. So 8 lakh shares have been added for the 12,200 put, while the 12,100 will be the next support for the index, and that too has seen riding in today's trade, adding about 6 lakh shares. So the range is 12,000 to about 12,200. Individual stock futures, of course, the Telecom pack is in focus. Bharti Airtel is, by the way, at live highs. Bad news, but good move coming up for the stock, I guess, for the last 3 or 4 months. Long positions up almost, it's doubled, by the way, in last 1 year. We've seen signs of long positions also on the future side. Of course, it's a bad news for Infratel if Vodafone shuts down, and as a result of that, the stock's fallen below 100 DMA. Shorting seen on the future side, and there is significant build-up that you can see, 28% higher in terms of open interest. And finally, IndusInd Bank has had a bad run. In fact, it's been underperforming its peers. It's down for the third day. It's touched 52-week low, and there are signs of fresh shorting for IndusInd Bank even at current levels. The counter is down 2.5%, 10% higher when it comes to OI addition.
All right, let's welcome in our market voice then, Rakshit Ranjan of Marcellus Investment Managers. He's joining us right now on the show. Rakshit, good afternoon. Great to have you with us this afternoon. Let's talk a little bit more about, some of the earnings performances, and can't not ask you about Page Industries. I mean, this one had been the darling of investors and, ready to pay any price to be a part of the Page Industries growth story. But that same growth story is starting to get questioned a bit. Do you feel that it's time now to, sit back and analyze what price you're ready to pay for the stock?
No. I mean, in terms of the fundamental strengths of the stock, we keep analyzing, not just now. It's been last 6 quarters that we've tried to understand what's happening at a ground level. So to begin with, I mean, we are still holders. We do agree yesterday's results were below our expectations. But when it comes to breaking the results down into 2 components, one is obviously revenue growth, which was 7-8%. Volume growth was flat, -2, I think, and the second component is margins, which was actually the main reason for disappointment. So on the former front, which is top line volumes, revenue, we are obviously not happy with the absolute number of 7-8% revenue growth in our portfolio companies. We expect on average it to be much higher. But at the same time, we don't see any evidence of market share loss, especially given that bulk of the listed competitors' universe is reporting similar or weaker, and more importantly, incrementally weaker revenue growth momentum. But more importantly, the quality in terms of working capital of this revenue has actually improved. So working capital has improved. Inventory days are down. Even dealers, the resentment, the distributors, dealers, the kind of disappointment that we used to see when we would do channel checks 1 year ago, with a couple of new entrants and very aggressive competitors coming in and offering attractive sort of terms to these channel partners. We've seen that resentment go away. So we believe that at this point, in terms of volume revenue, it's more a macro story, less a concern that someone should have on market share. The bigger disappointment, as I said, is on margins. But there, our view is that the kind of reasons that the management has given would suggest that the margin element is more of a one-off in terms of the sort of types of expenses getting bunched up in this quarter, or some of the incentives for the channel getting bunched up, some investments, etc. So we will wait out for 1 or 2 more quarters to see the margin recovery. But on the revenue front, we are quite all right, quite comfortable. The moats are still intact. And this firm, I think, over a longer term, continue to believe will be a true consistent compounders as we expect it to be.
You know, talking about moats, we were talking a whole lot about, I don't know if you track the stock or no, but since you mentioned moat, bring in IRCTC. That as a company has given you stellar results. Now, whether that's a function of the fees getting reincorporated in this December quarter, and whether or not the next few quarters as a result of that will also show you an improvement. But this is definitely a business, a monopoly business, and therefore should one look at this as an incremental purchase?
Possibly, yes. I mean, the kind of description that you gave, but we don't have it in our coverage universe yet, because we don't have a sort of couple of decades or 10, 15 years of consistent historical track record available from this firm, where the return on capital is far, far higher than cost of capital, and revenue growth is pretty healthy, and where we've done the work to understand why the history was so beautiful, because that's really the sort of 2 or 3 ingredients that go into our stock picking. To begin with, we need history to be there in a consistent and a healthy manner, but more importantly, we need to have understood that beauty which led to the history, and whether that beauty or the DNA, whatever you call it, whether that is still intact to deliver a very good outcome into the foreseeable future as well. So since that element of work hasn't yet gone in, we don't have it in our portfolio. We are not looking at it as of now. But yes, I mean, monopolies in India, some of them, not all, some of the monopolies in India, they are benefiting massively out of arbitrages around which they've moated their franchises, and it's very difficult to break into these competitive advantages. And if that is the case, then possibly this could be a stock, but we don't have a view on it.
Lakshit, hi, good afternoon. I don't know if you guys hold telecom stocks, but just wanted your view on the Supreme Court hearing today. And it's made some scathing comments with regard to conduct of the telcos and both the DOT officials as well. I think it's clear there is no relief coming in for telcos. And since the time, I guess 3 or 4 months back when the issue started, the stock of Bharti Airtel has almost doubled. They've already made provision to pay these AGR dues, but now it looks like that the industry is headed towards where there will be just 2 players which will be left, Reliance and Bharti Airtel. What are your thoughts overall, and do you feel it makes any sort of investment sense when the industry is headed towards a place where there could be just 2 players? Because Aditya Birla Group has said they will not be infusing any more equity. Vodafone PLC CEO, they've written down the value to 0 in their books, and they've also said without any government relief, they don't expect the survival to be there.
Yeah, I mean, the kind of concentrated market shares into the hands of 2 or 3 players, that sort of a construct is actually ideal in stock picking in India, because that exists in many sectors and it rewards shareholders massively. That construct does exist here, but what doesn't exist, and we don't have any of the telecom companies in our coverage universe, what doesn't exist in India for a telecom company is the real pricing power. So let me put it this way, if you were to define pricing power as, let's say, the ability of an incumbent firm to very confidently say that even if I get competition which offers 20-30% cheaper priced product vis-a-vis my current product, to the customer, right, then the customer will still keep buying my product regardless of what the price point for the same product from a competitor is. Right? So for instance, if I'm an incumbent in telecom and I offer a 100 rupee monthly plan or whatever, 100 rupee 10-day plan, whatever it could be, and if a competitor comes in and offers a 70 rupee or a 80 rupee plan, will the customer leave me and go to the competitor as long as I stick to 100 rupees, or will the customer buy from me at 100? So that's in a very, very simple way the definition that we use for pricing power. In India, that doesn't exist in the telecom sector. Here, the loyalty of a customer is not really to stick to a particular provider regardless of 10-20% up or down in the price. It's instead the other way around, and hence very difficult to sort of deliver again higher degrees of returns on capital employed in telecom in India, even if you have a dominant market share. So quick quantifiable way to understand it is even before Reliance entered into this category with Jio, right? Even before Reliance entered with Jio in 2017, I think, Airtel retained its market share for the preceding 10-12 years when the industry kept compounding subscriber base addition at 35, 40, 45% annually, right? Now that's a volume growth given to a market leader whose market share is intact, 35 to 45% volume growth each year, but we didn't see the corresponding growth in earnings for Airtel over the preceding decade, because that's where the pricing power ideally should play into the hands of a market leader. It didn't. So that's one element where we see the telecom players being a little weaker than what we would like a portfolio company to be, and hence we don't have coverage on them.
Okay, no coverage there, but an important space to track. We'll wait for some commentary also from the companies itself. Let's see if they have anything to say on that. But Graphite India numbers were, I guess, flashing there on your screen. Keep an eye on that one. They posted a loss versus a profit that was seen in the corresponding quarter. Rakshit, before we thank you, the stock's actually down 5 to 5.5%. I think after HEG's numbers, it was largely expected that it will be a dampener this time around. Rakshit, what's going to be the investment theme then for the remainder of the year? We're done with December quarter earnings. I know you guys have not shied away, from paying that hefty premium for companies who have displayed good earnings performance. Is the theme going to continue?
Yes, the theme continues. Our portfolio this year, financial year 20, based on the first 9 months and expectation for the last quarter. Based on that, our portfolio is likely to deliver FY20 earnings growth of more than 30%. So more than 30%, obviously that's thanks to the corporate tax rate cut, but even at a PBT level, more than 15% growth in PBT. So 30% plus growth in PAT, in profit after tax, and a corresponding growth possibly at the blended average level for the portfolio companies in terms of share price. So we are quite comfortable with the valuations being supported by fundamentals as they both progress hand in hand for our portfolio company. So yes, the theme will remain the same in the foreseeable future as well.
Okay, we leave it at that, Rakshit. Thanks much for taking the time out and being with us and giving us your perspective. Really appreciate your time. Okay, let's try and talk about the other issue at hand. SEBI has issued the final guidelines for portfolio management services firms. The new rules put a cap to charges levied by portfolio managers, move from upfront to trail. So there are some changes that will happen to how business is conducted. Ashish Somaya, the MD and CEO of Motilal Oswal Asset Management Company, which houses both an AMC and a PMS, I reckon. Johnson right now with his thoughts. Ashish, please correct me if I'm wrong, but I presume you oversee both the businesses. How does the landscape change for both in the wake of the notification by SEBI yesterday?
Yeah, I'm responsible for both. And I think that in the recent times, the regulatory approach has been to work towards making these products, especially when you talk about PMS as well as mutual fund actually. In both, over a successive number of regulatory changes, the effort has been to make them cheaper from a client's perspective, no doubt about it. Make it more transparent from a client's perspective. And third is also to make these offerings more simple and standardized and comparable across peers. So this is more a further step in that direction. And what has come about yesterday has, I think, mainly 2 or 3 elements to it. The first being that just like mutual funds have a intermediated plan, which we call a regular plan commonly, and then there is a direct plan which has no intermediary. The same way now they are expecting that in a portfolio management service as well, since these offerings are also carried by intermediaries. For the discerning customers or knowledgeable customers in PMS also, they want us to ensure that a direct approach is enabled. Apart from that, I think the commission practices, like that in mutual funds, they're not allowed to charge any upfront fee, and at the same time, they're not able to pay anything upfront to the intermediary. So I think even the PMS business is being aligned to this. All in all, my sense is that for people who are discerning investors, long-term investors, and who would like to hold on to a set of stocks, I think PMS is a superior platform. Whereas a mutual fund obviously is more amenable to, a mass retail pool.
Okay. Now I wonder, Ashish, so that is, thanks for that answer. The second question is then, therefore, what does it do to the operations and the profitability and of a firm which houses a PMS? I was speaking to one of your peers who said that they used to charge upfront. Now they'll have to move to trail. But he said, he kind of off air, of course, dismissed it as a one-off change, that it won't hamper them, if at all will hamper the distributors. What would your thought be?
Yeah, yes, it is. See, even from the intermediary's perspective, I think that when you convert upfront into trail, I think it's more a cash flow kind of situation. So clearly for the asset management company, I don't expect any impact on the profitability because in fact, if we don't pay any upfront, then clearly it has other ancillary benefits, which is that, any kind of escalations, any kind of even a minor scope of mis-selling, all of that is out of the window. Secondly, personally, like I said even a minute back, I'm personally quite passionate and sincerely believe that for a long-term investor who wants to hold a bunch of stocks, given that in a PMS, your Demat account, hence your holdings and your cash flows are isolated from the behavior of a large retail pool, which otherwise a mutual fund happens to be. So given that setup, I personally feel that a PMS is a superior vehicle for a long-term discerning investor. So from that perspective, I think that if anything is done to make the PMS product maybe cheaper, maybe more transparent, then given the other advantages, I think it only furthers what I believe in. On your last question, I think yes, there could be potentially an impact for distributors' retention, not because of upfront becoming trail. That's not the point. Like I said, that's only got to do with cash flows. But yes, where it could be is that now, just like mutual funds have commission disclosures, a PMS will also have a commission disclosure. Till now, PMS has always been very transparent, right? If you're a PMS customer and if I'm charging you 2%, example, then every month, 2% divided by 12 roughly is the fee which I'm charging you. So let's say for ease of calculation, it is 16 basis points. Then every month, you do get a statement which shows you how that 16 basis points has been debited. So mutual PMS has always been more transparent. Now it has gone one step further where they say that if you're charging 16 basis points a month, further, please let the customer know out of the 16 basis points, what is with the asset manager and what is with the intermediary. So you will actually have more transparency. You will have a better informed customers, which could put some, so if you have more information, then definitely you want to question it a little bit more. And I think that results in some back and forth. But I don't think the basic premise or proposition of the PMS service only becomes more attractive, according to me.
Okay. On that note then, Ashish, take a moment to thank you for joining in today and giving us your thoughts on these changes that have been announced.
Thank you.
Well, that's Ashish Somaya of Motilal Oswal AMC, which houses both a PMS and an asset mutual fund. By the way, earnings galore and they keep on continuing. SpiceJet has come out with numbers as well. 7.5% higher, because the net profit number at 73 odd crores, much higher than the 55 crores in the corresponding quarter last year. And I think the revenue number too has looked impressive. So in times when people were wondering whether the passenger traffic growth in India is looking okay and whether there are cost issues or no, I think one on the revenue front is not at as bad a number, but on the bottom line front, maybe aided by crude prices or otherwise, has not done too badly. I mean, for the internals, I don't have them. But if
they've actually recognized 250 crores as other income in Q3 on the account of MAX claims. There was a likely return of the 737 MAX Boeings in January, but that's been delayed. Now it's going to get pushed towards mid-2020. So that one-time thing has come back into the earnings performance. And also the revenues are strong. It's up about 47% year on year. So that's probably something that's kept the street a bit more interested in the stock. Though the stock is off the highs of the day, was up almost 9% at the announcement of the numbers, and now is up about 7%. That's also a strong number to go by. So that's SpiceJet for you and the numbers that we're getting. Aside from that, the other numbers that need to be focused on, and we'll try and get the management as well, is Shree Cement. Their quarterly performance operationally was good. EBITDA was up 20%. Margin improvement happened as well, but revenues remained flat. Profit was up just about 3% odd. Let's actually bring in Mr. H.M. Bangur, the managing director of the company. He's joining us right now to run us through how the quarter shaped up. Mr. Bangur, thanks very much for taking out the time. We've seen a good operational performance. EBITDA has been up about 20%. Margin performance has also been better. This has come primarily on the back of better volumes or better realizations?
It is both on the basis of volume also and realization also. Our volumes are up by 5%. Realization is up by 7%. And that is the way 12%. But because of this and the costs come down, per ton cement EBITDA has increased from 1100 to 1366. It is roughly 24% growth.
Okay. So would you say that, I mean, obviously when you look at the first half of the year and the earnings performance, it looked like, not too much in terms of capacity additions, but do you feel that the weaker demand environment is likely to change? The first half of the year was particularly a weak demand environment for all of the players, even in the northern region, the rest of India. Do you think that could change now?
I feel that after the budget, or even before that, the demand for this 1 lakh crore budget on infrastructure spending has started a little bit, and it should catch up gradually. Now, that means a lot of expenditure on roads, buildings, which means cement consumption. Overall, we are very bullish about the next quarter, January-March quarter. About 1.5 months have passed, and we are seeing definitely positive growth in demand.
What has been the effective capacity addition that you've planned out for FY21? I believe northern region particularly, capacity addition for FY20 was just about 1% or so. Do you feel that you will be looking at increasing capacities further? I mean, we're looking at certain numbers from the analysts, and they're pegging in FY21 capacity additions to be somewhere closer to 6%.
1 year is one thing, but right now from about 45 billion or 40 billion ton to 56 billion ton, we will become in 3 years. 6 months here or there, many things are in pipeline, grinding units and the mother units, utilization units, all will take place. Hello? Hello?
Yes, I can hear you, sir.
Hello? Yes. So all will take place. So it will be about 56 billion ton by the end of 3 years from now. By March 2023, we expect our capacity to be 56 million ton.
Okay. Mr. Bangur, volume growth for the northern region and utilizations, are they expected to remain flat at around 82%, or you'll see that also picking up?
Northern region demand is little low, but it is being made up by eastern and southern region. So overall, it is cyclical. After 3 months, the northern region will go up. Overall demand for the year will be almost the same, 3 to 5% growth in the volume.
So EBITDA per ton improvement likely for you? I mean, we're talking about bigger numbers. At least, the first 9 months, pricing growth has been about 16% year on year, which obviously reflects on the EBITDA per ton as well. Do you feel a larger improvement is likely?
We expect some improvement. Now, larger improvements are relatively not right, but we expect a little bit better EBITDA from here.
Mr. Bangur, I'm just going back to the realizations. Of course, they've gone up on year-on-year basis. You can correct me if I'm wrong, but I think on sequential basis, there's been a decline on realization. So has the volume growth come at a cost of prices in the quarter gone by?
Yes, we have to see both volume as well as the price. So it is come down by 3%.
Yes.
December 19, but the next quarter it will improve by the same percentage, 3% or so. So overall it will be balanced out.
Okay, fair enough. So give us a sense with regard to average prices in the quarter gone by to currently, what's the difference?
December quarter, our average realization was 4,550. Now it has come down to 4,430. Again, we expect it to come up to about 4,550 or so in the next January-March quarter.
So in the current quarter, prices have gone up vis-a-vis the third quarter, you're suggesting?
Minor.
2-3%
plus or minus depends on the volumetric distribution also, that how the distribution takes place in north or east. It doesn't mean increase in price as such.
Okay. 9 months, I guess you've done production of 17.4, sales of about 18. Where do you plan to end the year at?
It will be almost flattish here. Compared to last year, we are minus by roughly 2 to 3%. And we expect volume growth to be flat, about 0 to 1% minus.
Okay. What about the power business? Both at EBIT and revenue level, there's been a decline on year-on-year and sequential basis. Is it still struggling, Mr. Bangur? When can we expect the turnaround here?
Power business is, the buyers are normally state government, and they renegade on their contract. They say they will buy, and then they suddenly say the good rains are there, we don't need power, we don't take it. So they book the capacity and don't buy. And that is the problem. Otherwise, struggling of power business is there, which is likely to be there, but we can't do much.
Okay. Just one last question. You recently raised 3,000 crore, Mr. Bangur. I don't know if you bid for the Imami asset or not. What are the plans going ahead? Would you look at any acquisition in order to grow your capacity?
No, our hands are full with our own plan. As I was saying, that without adding any capacity, we are thinking of 56 million tons in 3 years. And that should consume a lot of our cash.
Okay. All right. So you're not looking at any acquisition, but just...
No, we are not looking at any acquisition.
Okay. Capacity utilization levels are still between 60 to 65%. You said you'll be ending the year with flat volume growth. So the demand on ground has still not picked up, right?
Demand, we have gone for a higher rate cement, and we have cut down purposely on non-trade, which is a low realization cement. Low realization. So that is the reason our EBITDA has increased, but volume have come down. You have to take a call what you want. Maybe after 2 quarters, we again will look at volumes.
Okay, Mr. Bangur, we leave it on that note. All the best to you for the coming quarters as well. That's the management of Shree Cement. Of course, on year-on-year numbers are looking good. There is margin expansion, but remember the volume growth that you've seen on sequential basis, it has come at a cost of lower realization, which essentially means that the prices would have been lower in quarter 3 versus quarter 2. Realizations for quarter 3 were down almost 3% versus quarter 2. But remember, Shree Cement is a stock within the entire cement space, which has done quite well. It's a debt-free company. They recently raised raised about 3,000 crore rupees. Let's see how they deploy that money. But it's an expensive stock. It's been doing pretty well in the last 1 year or so. 12,125 by the way. So we're not moving much, but I guess in the last 15 to 20 minutes, we've come off about 20 points for index. So once again, Nifty is down about 50 points. 12,100 remain a very crucial mark on the downside. That will be your first support. And of course, today's losses are being, contributed due to the weakness that you're seeing for the banking stocks for the second straight day. Nifty Bank is also down about 1%.
All right, that's what you've got in terms of the index move. Vodafone Idea now is down 17.5%, almost 18% down for Vodafone Idea. I mean, on an absolute basis, that's not much. It's just about 75 paise or so. But, clearly, equity value of the stock is just getting eroded by the day now. Sugar stocks are also not doing all that well. Shree Renuka, for one, has been down about 7.5%. You've got Hindustan Copper, which is down 6.5%. And Page Industries is 22,264. Still not a very violent reaction to the kind of numbers that they posted. It wasn't like they had a volume growth of 12% and then they reported a volume growth of 6%. They de-grew by 2.5%. So, it's 5.5%. Maybe is it enough? Maybe it's not. Let's ask, our experts when they join us. Shrikant Chauhan of Kotak Securities is joining us right now on the show with his technical perspective. Along with him, Pritesh Mehta of Yes Securities is also there with us. Shrikant, let's talk about the index. Volatile today is obviously a big contribution coming in from the losses in the bank Nifty. Do you feel that there could be further pressure building up? This is the end of the week, so you're going to be closely watching out for how the weekly close shapes up.
The Nifty has broken its crucial support area at 12,130, 140. In fact, in the morning only it has broken the level, but it recovered back. But eventually now it is settling down. So one thing is very clear, that there is some weakness in the market. Short-term formation of the market is turning negative. And on the basis of that, if we consider the overall formation of the market, then on daily basis, the market has formed lower top with some negative news flow and with some negative formation. So today, if the market is closing below 12,130, that means we are heading towards either 12,000 or maybe 11,900. So the strategy should be to look for adding some short positions or to create or to buy some put options if markets are closing below the levels of 12,130. Bank Nifty is also not supporting. It is also trading lower as compared to its previous close. In fact, it is substantially down because of specific news flow. So based on that, there also we are of the view that it is heading for the levels of either 30,500 or 30,400. So there also we should look for adding some short positions.
Okay. Pritesh, what are you going to do on the index?
Now see, if I'm supposed to choose an adjective to define the current state of markets, I would think of Dark Knight's Harvey Dent, the two-faced Harvey Dent, in fact, because this index, despite being flat or positive on the weekly chart, no clear trend is visible at all. It is unpredictable at the moment. It is continuously facing resistance around the budget peak of 12,217, and it is not breaking below 12,000 also. So I think this market is unpredictable from traders' perspective, and the way we saw the outperformance of Reliance, HUL, Infosys, so it is not willing to break down in a hurry on the downside. And despite being underperformance of private banks, Bank Nifty, this market is not going fast, lower. So I think we are going to be in phase between 12,000 to 12,300 in this range, and it is going to be tough, difficult for intraday or positional players to play on the index. But I think my view is a bit clear that on every rally it is going to be short-lived. We have to create short positions, and we have to get through this volatile period.
Getting shots on every bounce, according to Pritesh. The structure looks weak. on the Nifty right now, just on the brink of breaking down below 12,100. I just want to look at a few more stocks actually, and then I'll come to individual stock ideas as well. But yesterday we spoke to the management of Bharti Industries on their results, and a good set of numbers, and the management commentary was even more positive. The stock today is up about 5.5% after a good move yesterday. 1,021, they spoke about how the startup of their new CRAMS portfolio of contracts is expected to add more than 20% to growth to the top line, which will also aid margins expansion by closer to 100 basis points. All of those factors put together probably has stirred some interest in the counter, which is at 1,021. We'll get in a sense on how to treat the stock as well. But first, some stock ideas from you, Pritish.
See, I have two short recommendations. First one is short on RBL Bank. This stock is drifting lower from the start of the year, from Jan 2020. It is facing hurdle around the downsloping trend line. In fact, it has given a double bottom sell on pointed figure chart. Probably a ABC bearish counter also. So short RBL FEB futures for a target of 295. And second one is again short on DLF. See, DLF had a good strong move in last 3 months. It rallied towards 260 odd levels. Thereafter, it has faced resistance around the peak of the month of Jan, and it has been slowly drifting lower. Thereafter, we had a big bearish red tall bar, and then the stock has found it difficult to surpass even the midpoint of that bar. It tells me that the stock is going to drift lower. So short for a target of 208.
Okay, that's a sell on DLF and a sell on RBL Bank, and this one too has been weak, I guess. For RBL Bank, there was a disclosure. The MD has been selling some shares, I guess, in the last 1 week or two. Maybe owing to that, there is some weakness which is coming into the stock. Okay, Shrikant, what about you? Your stock ideas for this afternoon?
See, like today, number of stocks are falling, and especially Grasim, which was supporting above the level of 750. There we feel that it is under some trouble. It was like falling with very huge volume since last 4-5 days, and today eventually the stock has broken the level of 750. So based on that, we can expect close to 705 on the downside. So even at this price, 738, 740, it's a short with a price target of 700 on the downside. We can keep stop loss at 745 on the higher side. And other stock on which we are bearish is Punjab National Bank. The reason is because here also the stock has broken its important support area, above which it was holding for a considerable time. But eventually it has broken this level of 55, 56. Currently it is trading at 54, so with a stop loss at 57, certainly it's a short for the target of first 50 and later on maybe 48, 49.
Okay. Shrikant, what about IndusInd Bank? It's been falling for last 3 sessions. It's at 52-week low today, almost at the lowest point of the day. It's now trading below the mark of 1200 as well. Do you think there is more room for downside here?
I think, see, the stock is very close to its important support area of 1200, 1190. But yes, if there is any further more weakness in the market, then certainly we can expect further more addition on the shorting side. But to short at this price, risk reward ratio is not at all favorable. It was around 1350, 1340 some few days back. It is currently trading at 1200. And in case if there is any bounce back in the then the stock can immediately bounce back to the next level. So what is important is to understand us that to short at this level is not at all advisable. But yes, certainly if there is any bounce back, then we should look for reducing long positions or even to create some short positions.
Yeah. We were talking about Bharti Industries, and Deepak Nitrite is the other one that is one of the top movers within the space. It's up, I think, about 7% plus, 7.5%. Today's new mover is Navin Fluorine. Remember, this stock was active a month ago when you saw almost a day-on-day move in the positive side for the stock. The last 3 months, the stock has gained about 36%, but last 6 months, the stock's up 86%. So there is activity across the board for some of these names. Pritish, coming to you on any of these names, an Bharti Industries, a Navin Fluorine, or a Deepak Nitrite?
Naveen Florine, I think it's a very strong, solid uptrending counter. We have seen for last 6 months the stock moving from 650 odd levels to current levels of 1217. But I think there is more to it. The way the structure has been. We had a periodical decline in these counters. There has been short-lived in nature. The bounce has been very good, very strong, and we have seen follow-ups coming into it. So I won't be surprised if the stock goes to 1340, 1350 levels also maybe next couple of weeks.
Okay, now the one stock that is correcting a bit on the index is Eicher Motors. I don't know if it's the argument around premiumization not finding favor in the current scenario, which is hurting it even more, but considering the fact that ahead of the numbers the stock was 22,000 or slightly above that, from there it's shaved off now nearly 3,500 points. That's, well, almost 13-14% post the results getting announced, and in today's session too, trading at nearly the lowest point of the day, 18,593. I think when Anand Tandon comes in, we'll ask about the weakness that almost every product which has got some premiumization element to it is reacting and how it is reacting. So we'll talk about that fundamentally. But arguably this has to be one reason why Eicher is doing what it is doing. Shrikant, if you haven't spoken about Eicher already, the question, I mean, I don't know whether you will take a trade here or no, but what kind of levels do the charts open up as a result of the continuous fall that we're seeing in the stock?
See, technically the stock has broken its important support area at 19,000 levels. Even if we go through with the option data, then there was huge amount of open interest lined up around 19,000 levels, and after like dismissal of the range, we are expecting further more weakness. So the next level to watch out for is between 17,500 to 17,700. So even at this price, it's a short, but again the risk reward ratio is not favorable because the stock is falling. But the strategy should be to look for adding short position if there is any bounce back. So currently it is trading around 18,500, 600 levels, somewhere close to 18,700. It's a like one should look for adding some short positions with a stop loss at 19,000.
Okay, Anand Tandon is with us now. Anand, good having you. Thanks so much for joining in. Good afternoon. Anand, that question, I mean, Page Industries obviously seen a volume degrowth, and arguably some of the thought process, and we do not know what is right or what is wrong, time will tell, is that maybe premiumization is taking a bit of a hit. I wonder if the same argument and the same belief is being extended to almost every discretionary name which has got a premiumness element to itself. Eicher Motors the last few days or weeks has been falling and is currently trading at maybe multi-month lows too.
Well, I mean, you could argue that there is perhaps some truth in that, but then on the other hand, we have not seen any kind of decline in terms of demand, for example, for the paint companies, especially Asian Paints, which is also a premium product. So I wouldn't, rush to generalize. I think Eicher started losing its mojo a little while back because they, from having a large waiting list, they went to a stage where there was no waiting list, and for much of their market, the markets had got saturated, especially in the south. So it was kind of staring you in the face that the kind of demand that we'd seen in the past was not likely to maintain, and I think the management realizes the two, which is why they're looking at expanding globally. It still remains a niche player at the end of the day in terms of the kind of audience that it attracts. And, I would imagine that it's a certain age group which is used to having a certain feel and look about what they expect from the motorcycle or what they expected from that particular motorcycle, which is slowly getting exhausted. And therefore, I'm not that bullish on the company for now.
What about Page itself, Anand, and the volume degrowth that we've seen? Do you think it's a one-off, or do you think these numbers, if not in the same vein, but in the weak vein, could continue to plague the business for a while?
Well, if the numbers are weaker, obviously the stock will not sustain because it's priced to perfection and then some. But broadly speaking, they were attempting to try and change some of their distribution strategies. So far, they don't seem to be working. If they do start to work and you begin to see the kind of industry-leading growth that we've kind of got used to, then obviously Page becomes attractive all over again. But here you do have a case for saying premiumization is perhaps losing its flavor, because we had Lux, for example, reporting numbers which were actually doing reasonably well. Even there they had a kind of down trading that was happening in terms of their lower priced items selling more. So it is possible that it is beginning to hit at that level.
Earlier on, the management spoke about the supply chain, the distribution issues, and the distribution changes that were happening, that were hitting it. Page Industries, for that matter, at this price also, I mean, it's just 5% under. So it's not, probably you've seen a harsher treatment being meted out to some companies that have reported numbers at these valuations, which have not met street expectations. But that's Page Industries for you. Anand, overall, what has the sense been with some of the other heavyweights in terms of valuation? So let me just toss over an Avenue Supermart, since now there's another offer for sale coming in from the promoters, 2.28% that they're going to be offloading. They've put in a floor price, which is at a discount. But should this window where the prices are correcting be used as an opportunity for somebody to enter into a stock? Because visibility of earnings is definitely there.
Well, visibility of earnings is there. The question is, how many years forward are you willing to look, and what kind of growth you're willing to estimate will continue for how long? Obviously, I have been wrong in the past on this. The company has sustained its performance, but more importantly, the stock price has sustained exceedingly well. So I'm now obviously not going to be saying that, look, it is grossly overpriced, which it is. So the reality is that, there is talk on the street that there will be a stock split and then the stock will come back again to this level. We've had this kind of stories before. There is no question that there is a certain level of growth that will sustain the company going forward. But clearly, as the model is fairly capital intensive, unless they were to change that and stop trying to buy their own real estate, there will be either a dip in the ROE, or there will be a kind of need for dilution within the company, which will then force again the kind of ROE to fall in the near term as new stores come in and have to be purchased. Overall, at the end of the day, it's a retail business model. It should be reporting reasonably thin numbers, and what you're going to make up for in terms of the margins will be taken care of by the kind of volume growth. There is, of course, enough space for that to happen. But the kind of valuations that we are paying for it right now, to my mind, is still scary.
Some chart checks then, and I'll just quickly take a chart check on Avenue Supermarts only, since we're on the topic. Shrikant, your call on the stock, is this an entry point?
For D-Mart, I think the stock is now very close to its important resistance area. In fact, it is reversing from a resistance area. So we may see some correction, maybe close to 2250 or 2260, which is still like almost 7 to 8% from current levels. So at this price, just stay away. But yes, certainly if there is any decline close to 2250, then based on technicals, it's a buy. For Page Industries also, we are of the view that the stock has fallen vertically from the important resistance area of 27,000 levels. But at the same time, today's volumes are quite encouraging. Volumes are like much higher than last so many months. So one thing is very clear, that we need to see that from today onwards how the stock starts performing. So that is very important. If it starts sustaining above the mark of 23,000, then it's a bullish for the stock. And if it remains below 22,000, then it's a negative. So Page Industry, it's quite interesting formation. We need to keep on close watch.
Point well taken. I think the technical analysts we were interacting to even earlier during the day, they said not to short at current levels. I just want to highlight the low for Page was 21,609, and currently the stock's at 22,325. So it's already recovered nearly 600 points from the lower levels. Let's see where it closes. Definitely the numbers were weak, but it remains to be seen whether a company like this can it be bought at these lower levels or not. I also want to point out Nifty did breach the mark of 12,100, and we are trading now below the 50 DMA. Of course, 20 DMA is somewhere about 12,075 for Nifty. We'll watch out for that. And a very crucial mark for Nifty Bank today has been breached of about 31,000, and this one too has slipped below its 20 DMA in today's trade. So not good going, at least for the banking stocks. And pull up HDFC Bank, that's the one which is a biggest drag, I'll say, on both Nifty Bank as well as Nifty, since it is a heavily weighted counter. HDFC Bank is also down nearly 2% in trade. And then Tandon, would you advise people to buy, good quality stocks which have given you returns, which have given you 20% earnings growth quarter after quarter, year after year, at least for HDFC Bank, at a time when there is some bit of correction? Because at least in the last 2 years, only quality has performed.
Well, certainly quality has performed, and there is no reason to assume that it will not. The only question with HDFC is that there is going to be a change in management sometime soon. And therefore, to some extent, unless the new management, or especially the new MD who comes in, is a known entity, we will have some question marks for a little while. There is therefore a risk that a little bit of the premium that Mr. Puri commands may actually be rubbed off from the stock price. Other than that, the execution has been flawless. There is not much that you can complain with, except, let's say, a marginal increase in the net NPAs for the last few quarters. But there's nothing to shout about. So therefore, I would argue that you would continue to see reasonable performance. More importantly, the stock actually hasn't done well in the last 6-8 months. It's been hanging around the same levels. So it's not as if it's been, running away anywhere in a hurry.
That's HDFC Bank. Last 12 months, it's up about 13 to 14%. Okay, let's shift focus to earnings then. And from a small cap space, TD Power, the stock has actually rallied nearly 30% since the time they posted their numbers early this month. The company's posted a profit of about 6.7 crore in the December quarter, compared to a loss that was seen in the corresponding quarter of 3.7 crore. In fact, for the first time in their history, they've also declared an interim dividend. So I caught up with the company's managing director, and here's a slice of that conversation.
So what's leading this turnaround is our export business has really grown a lot compared to the previous years. We have been seeding the market and trying to enter into different geographies over the past 5 or 7 years, mainly trying to replace the slump in the domestic market. Finally, after many, many years of hard work, we're finally seeing the results of all our actions paying off. And order inflow has increased drastically, and correspondingly, our sales has also increased. We always had the capacity because we put up big capacities after the IPO in 2011-12, and since then we have been struggling to fill it up. But finally, we got to the stage where we're actually filling up the factory and delivering better numbers. Okay, so what are the capacity utilization levels currently? So we have a capacity of about 700 crores, 750 crores, and this year we will end with around 500 crores. So say 490 to 500 crores. Mm-hmm. And so it will be something like 70% capacity utilization. Next year we plan to go to 600 crores. So we are moving towards the higher capacity utilization, and definitely the operational numbers are looking a lot better right now compared to the past. Right. Nikhil, 600 crore in terms of revenues is something you were clocking, I guess, a few years back as well. So are you suggesting in FY21 we can see those numbers again? Well, we never hit 600 crores in the manufacturing business. The highest we ever did was way back in 2011-12. We did 411. So this year actually will be the highest in our manufacturing business at 490 crores. And next year, we're saying it's going to be 600 crores. We'll be doing about 20 crores from Turkey this year. So Turkey is also a manufacturing business. So it's about 500 crores, 510 crores, including Turkey this year. And next year will be 600 crores, including Turkey. So these will be our highest numbers. In the past, we had a fairly substantial projects business. And that's now down to just 25 crores. In the past, it used to be close to 100 crores. And we also had an EPC business, which was giving us about 200 crores in the past. That's zero. Okay. So what's left is only the manufacturing business right now. Okay, so let me get this straight. EPC is being shut down, and there are some pending orders. Has been shut down, right. Has been completely shut down. All right. And there are some pending orders in the project business, I guess, which are still getting executed. But do you plan to completely shut down this segment of the business? We're not aggressively pursuing it, and but there are still some pockets of the market that want to buy the machines from us. So those pockets, as long as they deliver profitability and we get good numbers, we'll keep it going. But the moment we see signs of that tapering off, I don't want to incur losses in that division, so we'll take appropriate action at that time.
Okay, but is there any one-time cost associated with this since you're downsizing this business?
No, it's about 15 people.
Oh, okay. All right.
So it's not like we're going to take a big hit, even if we do.
Okay. What about the order inflow? You said to compensate for the slump that you're seeing in domestic market, you're looking at more of export orders. I think in the quarter gone by, domestic orders were at 38, exports were 147. Is this the ideal mix then, Nikhil, going ahead as well? And if you could just give us an indication with regard to working capital as well, is it better for the export orders?
So clearly the weak domestic economy is not good for us, but to survive we had to go out, and we have been able to successfully fill our factories with sufficient export orders. If the domestic market gets stronger, and I hope it will, and all signs are showing that it will get stronger in the next few quarters, then that's going to be extremely positive for us. Ideally 50-50 would be a good mix if we have a very strong domestic market. But, I really can't count on the domestic market recovery, and we've depended on that for too long, and we no longer depend on that. So whatever happens over here in India happens in India, but we will keep growing our business outside India.
So if Nikhil, I'm sorry to interrupt there, the focus is exports. What about your subsidiaries then, US, Europe? I don't think they're still making money. Of course, as you mentioned, Turkey has been doing pretty well. Also Japan. When do you see these subsidiaries start to make money?
So Europe is profitable, was profitable last year, is profitable this year. It's actually one of our key engines of our sales growth. The US was profitable, but had broken even last year. We'll make a small loss this year, but will be very profitable next year. Japan has historically been very, very profitable for us. This year it's going to break even, but next year it's going to be profitable. We have good orders. And Turkey, which we started 3 years ago, was profitable last year, is profitable this year, and will make a big profit next year. So I'm not worried about the subsidiaries right now. All our subsidiaries are contributing towards the export business.
Okay, fine. Within the manufacturing, if I look at the pending orders, I think larger chunk is from railways. Could you just give us an indication with regard to how much revenue recognition is coming from the railways every quarter, and do you see that figure going up?
So this financial year, it's going to be 35 crores, and then we have 100 crores per year for the next 7 years.
Okay. For this financial year, it's total 35, and you're saying from next financial year, total revenue recognition from railways will be 100 crore.
Yes. We have to dispatch the product to recognize revenue.
Okay.
So what we have is a big pending order, but we will recognize revenue when we actually dispatch product. And we have a dispatch plan of over 100 crores next year.
Okay, just last few questions, Nikhil. What's the cash on books? I know you guys have declared dividend for the first time. The shareholders, if they're holding the shares, they've been quite patient since the IPO days. In your press release itself, you've said the stock of the company has underperformed Sensex and the capital goods index as well. What's the message you want to give them, and what's the capital allocation policy going ahead?
So we have definitely underperformed in the past, but we are back in business, and that's the message. We have recaptured the spirit that drove us in the past, and we have a very strong outlook for next year, and it's definitely going to improve into the future because we have a few things that we are doing and which are in the pipeline, which will further increase our top line and bottom line. In terms of cash, we have 150 crores of cash on the books. We have been fairly conservative in keeping that cash. So once we start generating more money, I think we will go in for a combination of share buybacks and dividends.
Okay, so that's going to be the combination, share buybacks and dividend. Leave us with the margin guidance to going ahead, Nikhil.
So EBITDA this year will be around 10 to 11%, and EBITDA next year will be between 12 and 13%.
Well, that's TD Power Systems. We should pull up the stock for a moment as well, and let's see what that is doing. A precious little. It's a company that promised a lot at a point of time and then just failed to deliver quite regularly, and maybe which is why there's sluggishness in the stock. Not just today, really. You look at last 2-3 years, TD Power has been very volatile, but also not necessarily the one which has given the best of returns. 36% in the last 12 months, but arguably a lion's share of the returns coming in the last a month and a half or thereabouts. Any which ways, this may not make it to the list of the Fab 4 stocks today, but as I'm sure there are a clutch of names which could, and Sharad Dubey is here with that list. Sharad, good afternoon.
Good afternoon. The first stock is SpiceJet. The numbers came out today. The stock is up more than 5% today itself, and it has snapped its 3-day losing streak. So strong operational numbers coming in, with the revenues rising by almost 47% to 3,647 crore rupees. The net profits also saw an increase of almost 33%, and the EBITDA rose by almost 11.5% to almost 509 crores for this quarter. Up next is Bharti Airtel, which is up almost 4.7% and it's trading at its lifetime high. And fresh longs is seen with a high open interest of almost 11%, and the volumes have also been trading at almost 3 times its 20-day average. Next stock is Deepak Nitrite, which is up almost 7.5%, seeing its biggest gaining streak in almost 7 months. The stock did hit its lifetime high today in day's trade, and also it has risen by almost 14% in the past 6 sessions. And the last stock of the day is Ircon International, is up almost 5%, and it has also hit its lifetime high today itself, and it has risen by almost 44% since its listing. Back to you.
Okay, Sharad, thanks a lot for bringing that Fab 4 stocks of the day. Markets do have recovered marginally from the lower levels. Nifty's at 12,114 right now. I'm going to take forward Bharti Airtel, which Sharad pulled up, and we did highlight the stocks been witnessing some longs as well today, and the volumes have been higher, as he highlighted. If you've got Anand Tandon with us, I just want to take, he is there. All right, Anand, looks like all the negatives are priced in for Bharti Airtel. It's doubled in last 3-4 months or so. What is your call on the stock? Do you think the market share can go up, at least the ARPU, since the tariffs have started to go up after 3 years? All the negatives are priced in, and is it poised well now going ahead?
Well, the negatives are poised in to the extent they still have to pay a lot of money. But yes, from a business perspective, 2 things have definitely happened. One, they are likely to now face less competition from Idea Vodafone, and consequently have more space to grow. And most importantly, ARPUs, as you mentioned, are already up, and as the management has indicated, are likely to remain up and continue to move up over the next several quarters. So I wouldn't be surprised if you and I are going to pay twice the telephone bill for the same number of minutes or data that you consume, simply because the price per unit is actually going to double from here over the next year and a half. So by and large, telecom is a space that is going to definitely have a lot of increase in EBITDA. And to that extent, Bharti is the pure play, the only pure play that you have in that sector, assuming that Vodafone doesn't put up more money.
Retail as a pocket has also not been doing all that badly. I just want to pull up Trent right now. Trent is trading higher by about 3.5%. And if you take a look at AB Fashion, some of the other retail counters which have held out pretty okay in the last 1 week or so. Stock today is down. The last few days have not done all that badly. Would you be a watcher of Trent, Shrikant? This stock has done well in the last 7 days as well, post its results. What would you do here?
Sorry, Devina, which stock you are talking about? Trends. Okay. Yeah, see, all these stocks are really doing well from the same basket. But Trent is like, it's exceptional completely. From 600 to 750 without any stop. And now also there is no such any selling pressure or any reversal formation. So I think the next level to watch out for based on extensions is around 820, 830, and the way the stock has spent time below the level of 600, I think the stock is eventually heading for the levels of 1000. So based on extensions, so any decline from current levels or because of any reason, we should look for adding position or if there are any positions, then one should certainly hold on to it because it is heading higher.
Anand, do you track a trend? Obviously, growth continues like clockwork for West Side. Star Bazaar has been a little bit of a disappointment for them, and this new format Zudio, which they've started, is expected to do well in the upcoming quarters. Do you feel that this could be the next leg of a big move for Trent?
Well, clearly Zudio is the one that is driving Trent for the most part. It is not a premium product, and the volumes continue to do reasonably well with a reasonable margin. I think the biggest thing going for Trent is the fact that they had their own brands right from the beginning. Their strategy was not to put up other people's brands but to develop their own in-house brands and to push that. And though they took a long while trying to increase the amount of volume of space that they were running, they did it in a systematic way without picking up any major debt and largely equity funded. So that has certainly started to pay off now. We are beginning to see the kind of growth that was expected for a long time has begun to come through. The biggest issue still remains, much like the Avenue Supermarket story, that while here you are talking about the higher end margin kind of play, the reality still is that it's an extremely expensive stock. So yes, if you are looking at growth, it will continue to sustain. Strategy is good, balance sheet is not stretched, valuations are not comfortable.
Okay, that's trend for you though in the last 3 months. Exceptional rise in the stock compared to some of its peers as well. The other stocks that are extremely buoyant today are Igarshi, which is up 11%. SML Isuzu is up, I think, 5.5%. And the last few days we've been talking about the performance of a stock called Honeywell Automation. Results were strong, and this one also, having its a low free float. The stock's at about 36,700, but 1 month, that's not stopped the interest in the stock. 35% in the last 1 month itself. Pritish, do you track a Honeywell Automation, or for that matter, even an Igarshi or an SML Isuzu?
Now see, Igarashi Motors on the weekly chart, if we go back in time on December 2019, had made a big green tall bar. And thereafter it came down, but the retracement was not so strong enough. Thereafter it again reversed, and we have seen the stock coming back sharply. For the week it is up by 6%, and I believe there is more to come. If the stock takes out the 3-digit GAN number of 361, we can see further upside coming up. I think the stock has the potential to go above the previous peak also, the recent peak also, and 441 would be the next target for the upside.
Okay, that's Honeywell Automation for you. Pulab, Jindal saw that too has gone up about 6 to 7% in trade, and even something like Aegis Logistics, that too is having a good session on a weekday, I would call it. So Aegis is up about 7 to 8% right now. Good going for this one as well. I just want to mark GAIL. I think that's your top loser right now on the index, 5.5%, and that's on back of the Supreme Court hearing which took place for the AGR due. 6% at day's low for GAIL. Remember, post the numbers, we had seen strong gains coming up for this one, but I guess it's given up all those gains right now. 12,111 for the index. Nifty Bank is still at about 30,830. It's time to take a look at what the dealing rooms are recommending. And we've got Darshan Mehta joining us with his channel checks. Hi Darshan, good afternoon.
Hi Navneet, good afternoon. One of the stocks that's buzzing in today's trade, despite all the negative news that's come out on the AGR, is Bharti Airtel. And there is reason to it because it becomes a two-player market. That is what the anticipation is. Bharti is very, very well, has a much stronger balance sheet, and they've already made all the provisions with respect to the paying off of the dues that are coming in. So there is enough traction. Dealers indicate that the momentum will continue. It's already trading at a 52-week high. So the trend certainly seems to be on the positive side. One counter which is not doing well for the past few days, it's fallen from levels of 540 to 510 currently, is Aurobindo Pharma. Over the past few days, there is fears of an OAI coming in for the Unit 4. It hasn't come out yet, but that's the fear that some of the people in the dealing rooms have, and there is short positions. Look at the volumes. Almost 4.4 million shares have already been traded on the counter. And finally, Apollo Hospitals is the last one in which dealers are indicating. They spoke to all the channels, but the commentary in the conference call that happened pretty much by noon today was extremely strong. So dealers anticipate brokerage upgrades to come in on Apollo Hospitals over the next few days.
Okay, Darshan, thanks a lot for bringing that dealing room check for us. And Apollo Hospital has had a good run. It's at 52-week high, and we've seen good long positions building up for this one, 1,700 on the stock. Shrikant, coming on Apollo Hospital, would you still advise at current levels one can look to take long positions here?
If there is a medium to long-term view, then only it's a buy, because today we witnessed a huge amount of volume when the stock was around 1750, 1760 levels. So maybe in the short term, along with the trend of the market, we may see some correction. But if there is a medium to long-term view, I'm going to say if there is a view of at least 1 month to 3 months, then certainly it's a buy, because it is into blue territory. I'm going to say into completely new territory, and it is heading for the levels of minimum 1800 to 1830. So it's a buy on dips, and for a positional view.
Buy on tips for Apollo Hospital, which has been doing well. Remember, the main concern here was promoter pledge, which has been coming down drastically, and as a result of that, even by the way, the December quarter numbers looked pretty healthy. A good bottom line growth was seen for Apollo Hospital. Anand Tandon, I want to talk about the cement space. You were just speaking to Mr. Bangur of Shree Cement, and of course, they've been posting good volume growth, good production numbers month after month, quarter after quarter. But this time around, looking at the realization sequentially, I think they decline, and similar trend we had seen for ACC as well. So it looks like the volume growth is coming at a cost of lower prices too, and this is coming at a time when we are also hearing cement companies are increasing prices. The on-ground situation still remains weak. What is your overall assessment of the cement space, which I guess a lot of the analysts have been betting on, but only a few companies like Shree Cement have managed to put up a good show?
This is a perpetual buy for most analysts, largely because it's now more or less domestic industry, which is becoming rapid, which has already got cartelized. So their ability to manage the price and volume is significantly higher. Despite that, the fact is that all the companies continue to increase their capacity way beyond what the demand increases. So one day the demand will go up in a reasonably strong manner, and that will be the year where they'll make lots of money, for which you have already paid for. By and large, the frontline companies are, to my mind, looking expensive. But despite that, I think you will probably find reasonable earnings growth in companies like ACC, which have not done all that well. The ones that are already doing well are probably fully priced. The mid-sized companies are likely to do better. A company like, for example, Heidelberg or so on, which is in the center of the country, is likely to be better positioned in terms of being able to manage volumes as well as prices.
Okay, the other one is TCS, and I know we would have spoken about it in part, but it's trading at or near the lowest point of the day or in the red. Now, the theory might be that Tata Sons may sell some stake out here in order to pay up for the AGR dues, so minor reds out there. But Anand, IT seems to be largely a forgotten story, or not stock or two might do okay, but otherwise we don't see constructive secular moves in IT companies these days. Would that be your thesis too? If you're investing, invest from not really a secular uptrending move, because there are other sectors which are doing that, more a defensive trading move?
Well, Neeraj, there are no sectors which are really, which should really be doing all that well in terms of the market. The fact that they are tells you that there is more money than there is quality stocks. The reality is IT actually, if you look at what the NASSCOM meeting this time put out, they seem to be turning even more bullish over the volume growth. And that has been the bugbear for the IT industry, that the volumes have fallen to single digits for most of the services companies. If that were to be corrected, I think you will find that the interest will come back. More importantly, valuations for the most part are not very expensive, barring, let's say, a TCS. Most of them are actually mid-teen kind of valuations, and the smaller companies are actually fairly cheap. Also, there is a new area that has kind of got listed over the last few years, which are product companies. And I think many of the product companies are reporting fairly decent numbers. So my bet is that you will actually find this sector doing reasonably well, because finally, if the volume were to pick up, there will be an immediate trigger. But even otherwise, even if there is no trigger, the reality is that if companies are well managed and report decent numbers and there is some uptick, you will find reasons for the market to pick them up. They are perhaps one of the cheapest high quality sector available to you.
In fact, in the morning as well, when we spoke to Vineet Nair, he seemed pretty optimistic on some of the new age IT companies rather than the tier 1 IT companies. Gartner themselves have put out a big $3.9 trillion spending for calendar year 2020. So that's going to show up as earnings for some of these bigger players as well. But that's the IT space for you. Anand, anything else that is on your radar for the rest of the year that you're watching out for closely?
Well, the prices don't move because we watch them. They move on their own, and we can pretty much kind of get dragged along. But there is one sector which has not performed at all, which is the power generation space. And a couple of new, recent changes there bode well for that sector. One, the fact that you are actually getting the central government to relook at the distribution part of it, and trying to move some of those utilities into the central space, which will therefore mean that they will have more ability to pay and consequently pick up some of the slack that is there in the generation sector. And the second, that there will be continual consolidation both in terms of the new plants getting resolved by the NCLT and the older ones getting mothballed. There is increasing news now of some of the older power plants getting mothballed because of the fact that they are rather sulfurous and generate a lot of carbon. So in both the cases, I think you will find that power assets which are now trading at probably a third of what they were at the peak are reasonably attractively priced because they are currently underutilized. As the utilization increases, I think you will find that they'll do reasonably well. Another sector which you mentioned a little while back was hospitals. To my mind, the newer listed hospitals like Aster and NH, and for example, even HCG, for example, have all put up a large amount of capacity over the last few months, and that capacity is now slowly beginning to get absorbed. It's already happened in the case of NH, and this quarter, if you saw the results of Aster, they were very promising. SCG probably take another 6 months, but I think that again, you'll probably find that the performance starts to pick up fairly rapidly. So essentially, one is looking for capacities which are already there, which may start to get utilized, and that is where your biggest delta will come from.
Got that. Anand, it was great chatting with you this afternoon. Thank you so much for joining us.
Thank you for having me.
All right, we're just about 10 minutes left to go for market closing. And it doesn't look like it's going to be a great close. I think this is almost the lowest point of the day, about 0.5% once again. So extremely volatile intraday. A lot of jagged edges on the index itself, but the clear flow for Nifty Bank has been on the downside. 400 points now given up. The outperformance of the mid caps and the small caps is completely dissolved in today's session and over the last few trading sessions as well. Today's session, mid caps have lost about almost 1%, small cap index down about 0.5%. But closing strategies from our technical experts. We're going to come to you first, Pritish. What's it going to be?
Now see, we have created our own customized cement index. We have taken into consideration 7, 8 top ranked cement counters, and we have drawn a cement chart of it. And that index tells us that it has reversed from the multiple resistance zone, and we feel the likes of ACC and Ultratech can see a sharp decline in the next couple of weeks. So I think a 5% fall in ACC and Ultratech is possible in the next couple of weeks.
Shrikant, what's going to be your closing idea?
See, at this juncture, if we go through with JSW Steel, then there we are seeing some selling pressure because the stock was very close to its psychological mark of 300, and from there it is reversing back. So from here, if we see any correction in the market, then certainly JSW Steel can also contribute into that. And the next level to watch out for is between 280 to 275. So it's a short at these price around 288, 289 as per cash levels, with a stop loss at 292, and we can expect close to 277, 278 on the downside.
Okay. ONGC reports numbers later today, so going to be watching out for that closely. Ahead of numbers, it's down about 2% Shrikant, do you track ONGC? Is there a call on this one?
Your voice is dropping.
ONGC, Shrikant, ONGC.
ONGC.
Yes.
Okay. See, for ONGC, see, one thing is very clear, that the stock is forming lower top, lower bottom since last so many months, and even after like hitting the levels of 100, which is psychological mark for it, here also the stock is not stabilizing. So it is better to stay away from the stock, or if there is any specific, like really somebody want to take any view, then one should look for adding some short positions even at current levels, with a stop loss somewhere at 110, and we can expect again on the downside 100 to 96. So the next level to watch out for is somewhere between 95 96 levels. It is going to break its psychological mark of 100. That's the view.
Okay, going to break its psychological mark of 100, but I just want to quickly run you through what's expected out of ONGC's Q3 numbers. So starting off with the revenues, expectations are that you'll see a dip of about 2%, and similar is the case with the EBITDA, which is expected to fall by around 8.8%, coming in at about 12,124. Margins expected to come in lower from 54.3% to about 50.5%, while the net profit is expected to see a decline of about 16%. 15%. So from 6,263 to 5,258 on a year-on-year basis. Obviously, you know, you're going to be watching it closely for the impact of the gas price cuts of about 12.5%. Lower gas prices, higher depreciation this time were expected to have an impact on the numbers. And there's also been an absence of the dividend income that is likely to impact profit. Remember, in Q2, they had a dividend income of about 1,639 odd crores. So that's going to be missing in this time's numbers. Aside from that, gas production is lower by 1.6%. Gas sales also lower by about 2.4 odd percent. However, watch out for the guidance in terms of the oil and gas production numbers and the outlook for FY21 and OVL's earnings and production outlook as well. Along with that, the current status of the KG DWN 98-2 development and what happens on that front. So those are some of the factors that you need to keep in mind.
Okay, that's ONGC for you. We'll see how the numbers pan out and we'll see the reaction probably on Monday for this one. But pull up Shriram Transport. The stock has recovered nearly 30% from budget day lows of about 987 to now stock inching very closer to the mark of 1300 in a weak market like today's. Shrikant, would you take a bet? And the recovery that we've already seen in the last 2 weeks, at least since the budget day, is there more room for upside for Shriram Transport?
See, certainly the way the stock recovered from its lows, and there was like huge amount of short positions based on option data when the stock was around 1150, 1200 levels. But after this particular up move, the stock has broken almost all important level, and now it is trading at its very crucial mark of 1300, where there is huge amount of open interest. But if it breaks to this, then the next level to watch out for is between 1400 to 1440. So even at this price, certainly it's a buy, and we can expect further more activity because the stock is into short covering mode. One should look for adding positions with a stop loss at 1250 on the downside. Because the stock is quite volatile, we need to take position based on bigger stop loss and buy at this price more on dips and keep final stop loss at 1250.
Okay, Jana, and stay on. We'll take in closing thoughts from you, but let's start wrapping at the markets, and it's not turned out to be a great day. We spoke about it at the start of the show today. It's very surprising if people take home some long positions ahead of what is arguably turning out to be very eventful day-by-day discovery of how bad the coronavirus situation is. So about 1.25% lower. We have our own problems to deal with, by the way, today, and as a result of which we've fallen, but nevertheless, closing at the low point or around the low point of the day. The mid cap and the small cap indices were outperforming the large caps for a better part. The small caps still not falling as much as the bank nifty, but the mid caps certainly have fallen more than the nifty and the Sensex. What about the large caps and how they have done? Well, Yes Bank 4.5% higher. Now 3 days on a trot now, this bank has had good moves. Bharti Airtel about 4.5%, seemingly rejoicing the duopoly, possible duopoly that we may have. At least the market likes to believe that way. UPL, BPCL, HCL Technologies are amongst the others that have gained. ICICI Bank has gained, and Reliance Industries, the big boy too, has gained a little bit, about 0.75%. What's not done well? GAIL, and again courtesy the Supreme Court verdict. It's impacted a bunch of companies. GAIL, Bharti, Infra, Vodafone Idea, not on this list, but I'm sure we'll talk about it. IndusInd Bank, again getting impacted because of this. Eicher Motors has had some issues today. Two-wheelers by and large are looking slightly wobbly. And amongst the heavyweights that is actually putting pressure on the index is way below HDFC Bank, down about 1.79%. So that is looking a bit wobbly in the session today. But large caps have corrected and mid caps too. Maybe not small caps, but the mid caps definitely corrected a lot.
Yes, Neeraj, they did correct. And in fact, I think the sentiment was dented post the Supreme Court hearing on AGR issue, because the start was pretty much in the positive. We had a gap up opening, and there you go. Mid cap index is closing at the lowest point. Not a great sign, actually, down 1%. Let me begin with a couple of gainers. Lupin did well. Remember, some of the pharma companies have started to do well, be Dr. Reddy's, Divi's in the past, and today Lupin in a weak market was up and about. Shriram Transport, we just took a technical check on this one. It's recovered 30% from the budget lows. So yesterday also the stock gave you returns of about 3 to 4%. Today it's closing at the highest point of the day. Reacting to its numbers was SpiceJet, posting good set of numbers, good growth on both top line, bottom line when it came to December quarter numbers, but I guess it's closing off the day's high as well. Jindal Saw was the other one from the broader market, which had a good session today. So that one rallied about 8 to 9%. Then you had something like Aegis Logistics, which has been doing pretty well so far this year, and that's closing with gains of about nearly 6 to 7%. And Mindtree, right from the word go in the morning, there was an interest seen in this counter. Even in the future side, good positions were seen. Despite of markets turning weak, this one sustained the momentum throughout and closing with gains of 2.5%. On the losing side, D-Mart profit booking seen after the OFS price was announced, 2049, and heavy profit booking, I would call it, down 6.5%. GICRE did not have a great session. NMDC was down 4% yesterday, and you saw cuts of another 3 or 4% coming in today's session once again. And Pfizer did not have a great session. I think this one had a significant fall today. Pfizer tumbled about nearly 9%, closing at a day's low, and Mass Financial was the other stock alongside something like Tata Elxsi. Mass Financial is down 8 to 9%, Tata Elxsi also falling by about 5 to 5.5%. If you could also pull up Vodafone Idea, I think it opened gap up 10 to 11%, reacting positively to the numbers, and it's closing with cuts of about nearly 22%.
Mostly record volumes as well on this one in today's trade. But we've got a weekly close to watch for. Today's dip of about 0.5% on the index is added to the pain of the week. Nifty Bank down about 1.2%, 371 points. Not at the lowest point of the day, but still, I mean, it's no solace out there. Sensex is down about 200 points. The weekly close of the index will come up. Today's drag came in from those heavyweights of HDFC Twins. You had SBI looking weak, Kotak weak. But the week and how this is shaped up is you've got gains coming in for chemical companies, not just in on the index, but across the board. UPL has been up 9% this week. Bharti Airtel, add to that gains of today for the week, is up about 4.5%. Dr. Reddy's on that deal with Walkhard, Hindustan Unilever on the Motilal Oswal report, Reliance Industries, which itself has been pitching in a bit, Bajaj Finance, HCL Tech, TCS doing okay. What didn't do too well was IndusInd Bank, again on the Moody's note. Mahindra & Mahindra was down 8%. Eicher Motors, Britannia Zee looked weak.
Well, Nifty's closing flat, and this time around, broader markets definitely underperform, at least for the week. Nifty Midcap Index is down 2.2% for the week. Ipca Laboratories was your top gainer there, up about 13%. Remember how we've been talking retail companies are doing well. So Future Retail was up 10%. Alchem Laboratories, Torrent Power has been trading at its 52-week high levels. Good set of numbers coming after a while. Balkrishna Industries also had a good session. For the week, it was up about 5%. Even Torrent Pharma, by the way, has been trading at its 52-week high. On the losing side, HEG, bad set of numbers, was down 16%. Indian Bank, Whirlpool, Graphite, and you had stocks like REC, Nalco Steel Authority, BHEL. All of them saw cuts of between 12 to 9% for the week.
And there goes your outperformance of the broader market space to the benchmark indices. A quick closing comment then from our experts as we step into trade next week. Come Monday, what will you be watching out for, Shrikant?
See, on daily basis, the market closed below the mark of 12,130, which is negative. It has formed lower top formation, and it has confirmed this particular formation by reversing the overall trend. So on daily basis also, the stock has formed bar reversal formation. So based on that, we can expect 12,000 to 11,950 on the downside. So I think we are in the next week, in the coming week, we are expecting market to fall towards 12,000 levels. And if we see these levels, then also around these levels, one should look for creating some short positions.
Okay. Pritish, what about you?
Now see, at the start of the week, we have our own, a customized breadth index, which told us that the market was overbought. We should not be creating aggressive long positions, and thereafter we have seen sharp decline coming in. But again, I feel that it is important for index to break below 12,000 mark. Once that is confirmed, then we can see further unwinding, we can see further shorts getting into the system. So I'm keenly watching out for that level. As I mentioned at the start of the show, 12,000 is a big barometer for me. If index trades below the same, then we can see further short selling.
Okay, we leave it at that, gentlemen. Thank you very much for joining us this afternoon, Pritish, as well as Shrikant. And on that note, it's a goodbye from Neeraj, Navneet, myself, and the entire team that's put this show together. Have a great weekend.